Hello guys, so this stock has just released their quarterly results and their numbers totally blew our mind because this stock is really growing faster than Alibaba, and we feel that this stock has a very high potential. Okay, so if you are an Alibaba shareholder, this stock you need to take note, all right, because you can see Alibaba's also released their results quite recent. So let's do a comparison. Okay, let's do a comparison. So the revenue increased 7%. Yeah, income from operations decreased 3%. Net income, if it's how to say, based on GAAP lah, GAAP income, it decreased by 96%. Okay, but if non-GAAP, decreased by 11%. Yeah, then this stock, okay, on May 22nd have also released their results. So let's compare. So their total revenues are incredible, increased 131%, whereas Alibaba only increased around 7%. Okay, then operating profit increased 275%. Yeah, whereas Alibaba, if you still remember, but decreased by 3%. Now let's look at the net income. Now the net income, okay, based on GAAP net income, increased 246%. All right, whereas Alibaba decreased 96. Then, okay, their non-GAAP increased 202%, whereas Alibaba decreased by 11%. Okay, so based on these numbers here shown by this stock, all right, we feel that they are working actually in the same space. Okay, they are in the same space, and it caught our eye. Right, it caught our eye, and then we decided to dig deeper. What is this company about? And how is their performance like? Okay, so this stock is none other than Pinduoduo. All right, I believe in my previous video I already shared, all right, about this company, all right, and they are competitors in the China market, and then this company of course caught our eyes, and then we decided to do a deep dive and this research and see how's their performance lah, and let me tell you this before I proceed, no intention, okay, this video there is no intention of supporting or condemning any stock. Okay, my role here, okay, and this video is to bring facts, numbers, and evidence to the table. Right? If let's say you are any stock investor or a shareholder of a company, I'm not talking about Alibaba also, you must understand what our current company is doing. All right. And if you have a competitor, okay, the stock that you invest, they have a competitor, you also need to be aware on what are they doing. If they are doing better than the current company that you are investing in, then you must be really, okay, take a look, all right, and research how, okay, how they will, in a sense, affect your current company that you're investing in. All right. We cannot fall in love with our stock. Never. All right. And never make any emotional decision. All right. And when you invest, let's say you own a stock, okay, don't have any confirmation bias, because I know we tend to always want to support the stock that we invested in. So we somehow, close one eye or be blind towards any cracks in the thesis. We only focus on the good things. Yeah. So don't do that. At the end of the day, we as stock investors, we must make a fair, logical, and informed decision. Okay. So let's proceed. Now, in my previous video, I do share, okay, that this company Pinduoduo has been taking market share from both JD and Alibaba already. Okay, and then a few other charts I've been showing you lah. Okay, like this darker blue color, you can see it's getting wider and wider. It means they are taking market share lah. Okay, and this one also Pinduoduo in 2022, the market share is around here, but now it's okay. Getting 1 year later, it's getting more. All right, so we have already shown the facts. I double confirm with many other charts, and it seems that Pinduoduo has been taking market share from other e-commerce companies lah. Now let's go through the financials, okay, and see the potential. So this company is incredible, has been growing quite fast lah. So you see, normally these kind of companies when they grow fast we were normally expecting that they will burn cash, not profitable, because they're spending so much on sales and marketing, right? But yes, during the early years, they were not profitable. But starting from 2021, which is already 3 years, okay, they have been showing profitability and increasing, increasing also. They've been growing very fast. Yeah. So this is the chart on their net income. Then not only that, okay, their growth rate, you can see this red color is their revenue, right? Now, their growth rate, you can see is quite amazing at a high double digit and triple digit. So let's see the latest one. Okay, let's say starting from 2019, 129%, 97%, 57%, 39%. Okay, and then they re-accelerated, okay, to almost close to 90%, and now like last 12 months grew by 105%. Yeah, so they have been growing very fast, whereas other e-commerce companies seem to be quite slowed down. Okay, now let's look at their margins. Quite incredible also, very high. Okay, they can achieve 70 to 60% gross profit margin. Okay, very high gross profit margin, okay, for a tech company lah. And then their operating margin and net profit margin, despite it was negative, it was loss-making, but you can see their trajectory. It was improving year over year. Okay, and then by 2021, it was already positive. Okay, already positive, 7%, 20%, and it's quite close, like the operating margin and net profit margin. Okay, they stick together here. So it's a very, very high. The most astonishing thing that amazes us is their cash flow. Really, when I see this, it shows me, that this business doesn't need a lot of cash to run or to maintain the business. Why is that? Okay, the red color bar you can see is their cash from operation. Yeah, the cash from operation has been increasing every single year. So you cannot say that, they are burning cash, they are losing money. This is really quite a profitable company, a cash generating machine. And once they earn the cash from the operation, which means cash from the business, right? They need to minus CapEx, which means, capital expenditure. After we minus capital expenditure is the free cash flow. Can you see that the free cash flow is almost the same as the cash from operation? Crazy. That means they need very, very little CapEx. So almost every of the cash they earn from the business is being converted to free cash flow. Okay, so when a company has a lot of free cash flow, they can do a lot of things. They can, spend more to improve the business, to do more sales and marketing, for example, R&D, so it's very, very good. Okay, these kind of numbers here. Yeah. So this video is a very short video, and to highlight to you guys, about the potential of Pinduoduo. Okay, so as a summary, all right, based on, our preliminary, assessment, currently they are growing very fast. Okay, for many, many years already, including for the latest 3 years, right, 3 to 4 years. They are also profitable for 3 years. High gross profit margin, I already showed you guys. Increasing net profit margin also. And they have a very low capital expenditure. And because of this, they are a cash generating machine. All right, so they must be doing something right lah. Okay, as of this point, because you cannot lie. Their results, their numbers is shown already. So they must be really doing something right. So that's why, we decided to, take a deeper look. Okay, take a deeper look onto this company lah. All right, so on my next video, I'll be doing a complete stock analysis on Pinduoduo. All right, so take note on my YouTube channel. So if you guys, like this content, do click like, subscribe to my YouTube channel, because I'll be posting my next video, on Pinduoduo's complete stock analysis. Okay, so hope this short video here benefit you guys. All right, and see you again on our next video. Okay, thanks. Bye.